what up, everybody? Can you hear me? Can you see me? Put a 1 in the chat if you can hear your boy. Let me know if you got me. Hold on, I'm looking like way up there because y'all are way up there. Let me move this. Let me know if you can hear me and see me. This is a Discord-wide exclusive. All right. So we ran a poll, right, to see what people were interested in, and so hold on. As far as what they wanted to learn, and that's my way of kind of like giving power to the people. Why do I do that? One, because I have so much information, and all the crown traders have so much information, and part of us wants me. I want to stick to like a system where I'm progressing in these trainings. However, I'm not ignorant to the fact that we're always getting new people, and or there's people that may have missed previous trainings, maybe are still struggling with certain things. And so therefore it's kind of harder to push past that. Now, the more advanced stuff, like most traders that are kind of ready for advanced training, they're probably pretty solid. They probably don't really need it. You just got to keep it simple, right? You don't need like the QVP information, like you don't need TPOs or whatever, right? Like what if you have a system that works, totally understand that. But for those that are new and is trying to figure out this game, I'm suspecting that most of the training is going to be favorable to you because you're trying to figure stuff out, right? Even if you've been here for a while, you probably don't have like everything locked down, and you're still just looking for the nuggets here and there just to keep you, to help streamline your process. I messed up. I need to get a drink before I start talking. But let me take a look at the chat. What's up, Tony? Uncut, I see you. Digi, I see you. Queen Nisha, Queen Fee, I see you. Barry, I see you. Diggy, I see you. All right. Now, we only have 8 people here, but we had a lot of people express interest. So it's kind of tough because I've already like abused my everyone tags. So let me see if I can get somebody to tag for me. Okay. Newbie here. Hey, welcome. We all start somewhere. All right. Hold on. I did bring a drink. We're good. Hey, welcome to the abyss of trading. Hey, once you fall in this pit, you trapped. you hooked. Once you get that first big win, you're gonna be like, oh man, it's can I get another home run? Hey, Shine Works gonna be over here fiending. Especially off them rail plays. Come on now. We get home runs. All right. Granddad got my back. I got to put him aside real quick. 1 second. All right. So as people are tapping in, I'm going to just pause just a little bit, and then we're going to get into it. So essentially, the majority, it was a close one, y'all. It was a close one. Hold up. Let me see if I can get this on the screen. Oops. Let's see if I can save it. Screenshots. Okay. So it was pretty close as far as the topic that everybody wanted me to cover. Okay. So I'm just going to share that. And what I'm going to do, because it was so close, I'm going to make sure that, let's see, I'm going to make sure that I kind of go over like high level stuff on other topics. Okay. So today, it looks like it's a tie between the chart setup and the entry and exit strategies with the dolphin on the defining spot and spotting supply and demand zones. Like, so everybody's everywhere. And so yeah, it's a pretty tough one. So I'm gonna try my best to squeeze as much information as I can in where it makes sense within the time limits that we have. All right. So hey, sink or swim. We got to go. All right, let me get rid of this. All right, so without further ado, let's just tap in, okay, to a chart. And I think we're going to be able to breeze through this pretty quick as far as like the setup and stuff. So I'm going to touch on that, and then I'm going to move into a quick overview of supply and demand, and then we're going to move into a quick overview of entries and exits. Okay, so I can probably flow it all together, but do understand that each of these topics can be like an hour conversation. Actually, each of these topics can have multiple training sessions because you can get very, very minute when you're going over these things. Okay, so let's see what I can do and see if I can make it make sense within the time frame that we have. Right. So let me make sure studio mode, I'm going to the right feed here. Okay, let's do that transition. If you have any questions throughout this process, let me know. Earlier already, somebody asked a question, recommended platform for easy stop placements, Weeble and Thinkorswim. I would say those would be pretty easy. And then, of course, if your brokerage account is tied into TradingView and you can trade with TradingView, then that's also, for me, that's probably one of the easiest. But I'm going to show you what it could look like through your mobile app as well. All right, I'm going to do my best. So, all right, let me get rid of this. So if there's no questions, we're going to go ahead and get busy. All right, so let's go here. Take off my watch. Can you still hear me? Can you see me? I'm on a different screen, so I want to make sure that, put a 1 in the chat if you can hear me. And if you're sitting here and you're in the Discord, announce that, just tell people that we live, because for me to open it up to the entire Discord and only see, like, from my view, only 9 people, that's wild work right there. Football ain't on yet, and everybody off of work. So, well, for the most part. All right. You know what? I might just abuse this. I don't want to waste this session. I'm going to see what happens if I edit it. Edit message. Live right now. Okay. All right. So let's do this. I'm going to go ahead. I'm going to open up a brand new chart. All right. And we're going to use, let's see. Should we do silver? Silver's kind of wild. I'm trying to figure out what's kind of stable and easy for us to kind of cover. Right? So let's do NVIDIA. Okay? So what I'm going to do, I'm going to clear my charts. And I'm going to show you start to finish, like real close or real quick as far as how to set it up. Okay? So let's go to remove drawings. I had 61 drawings on here. I'm restarting it for y'all. Good evening. What's up, Real Life? What's up, Evan? All right. So what we do, okay? So this is part 1 of 3 that we're going to cover during this training session. Okay? So this one is how to set up our chart, right? So every Sunday I'm live with the members of my Discord, and we cover the SPY and then 1 or 2 other plays or tickers, right? And we set up our structure for the week. In the beginning of the month, we do the entire setup for the entire month. It's set up that way so at any point, if SPY, for instance, decides to go into a brand new territory, or if it decides to fall back into a different trading zone, members have the levels. Now, KGU, I share those levels with you as they become relevant, okay? But I go over what I'm about to go over with you with the Megalodons in my Discord. So we're going to go to the day. We're going to go to the week chart and get a good view. I started the week because I get an idea of, the direction. Now, we already know that we're bullish, but at the same time, you want to get an oversight because you don't know if you have broken a level of support, right? An ascending level of support or whatever. Like, so did you break structure, or are you still in an uptrend technically? So I'll do this and I'll eyeball it, but most times I'll grab a parallel channel, and I will draw where I have 3 points of contact essentially. Anytime you see lines on my chart, if it's a like a symmetrical triangle system, or support resistance, anything like that, most times I'm going to have 3 points of contact. I'm going to be looking for 3 points of contact because that tells me that there's some skin there, right? There's meat on the bone, and that level or whatever is important, right? Because we've had multiple reactions to it. So that's kind of what we look for. So in this particular instance, like, some people might say, well, I'm going to take the highest high and the lowest low, and then that's my range. That is not how I trade, right? That is not how I look at this, right? So I can do the entire thing, or I can go and focus on just this trend, right? I can focus on this trend versus the entirety of the trend. But I don't have the points of contact that I'm looking for. So I'm going to go with the general sense of the trend personally, right? And where we're getting the most reactions of this ascending channel, right? So let me make sure. All right. So let me zoom in so you can see it. Put a 1 in the chat if you're tracking so far. Okay. All right, so this is wide view. I'm point this out. I have my point of contact here, point of contact here, point of contact here, point of contact here. So this ascending line of resistance is pretty dang strong, right? So that tells me anytime we get to this level, there's a strong chance that we're going to get into a reversal signal. Same thing from the bottom side, right? So we have multiple levels of demand, right? We have support here. This is ascending line of support. Typically, my red and white are flipped. So my white is my support line and my red is my resistance line. Okay. This, we had a breakdown, right? But for me, it's like one of those false breakdowns, right? Because we fell out of a trend and we ran back into it, right? And then established demand at an ascending line of resist or support. So this was a fake out because now we're back at it. And we came back up to retest this ascending line of resistance. And now we're back down to retest this ascending line of support, right? Which we have a nice indecision candle at the bottom, which can then turn into a demand zone if this next week candle, finishes solid in green, right? So, and if we see that, then that tells us that we're pretty bullish on NVIDIA, at least to 189. And then from there, we break up and we might head up to 220. But not there right now, just overview. So the other thing I'm looking at when I'm paying attention from a zoomed out view is volume, right? I don't have any, I have my indicators here, but I typically don't have anything else here besides volume, and I'm looking at price action. So essentially, what do I notice? I'm noticing that as price is going up, right, volume's going down, right? So that is divergence in the market. So I see and understand that the bullish volume is dying off. So that tells me that we could be in for big reversal, but how long? I don't know, because this is a weak view, but I do see the fact that steam is being lost. So that's just something to bring my eyes to. But in the meantime, I'm going to trade what I see, right? But I'm prepared for this structure to be broken at some point. Okay. All right. So Also, this tells you that maybe we might not make it all the way to the top of this ascending line of resistance. Maybe we only make it to the halfway point and then retrace and live below this halfway line. And if we do that, then that's a strong signal for me that we're likely to come on down, right? Other thing I need to point out is that when you see a 21-day, that's what this is, and a 200-day EMA separated, right? And it's by a lot. You see this gap, you typically need, eventually they come back together, right? There's convergence. They typically come back together. Once the further apart they get, the higher the chance that they're gonna kind of do the other thing, right? So just a heads up. Okay, so I'm gonna get rid of that. So that's my overview. So now from there, I'm gonna get rid of this because it's just noise on my screen. Now from there, now we're gonna get into the setup part of my chart, right? And this is just a broad scope. So I find my support and resistance levels, essentially, right? So I'm looking for multiple points of contact for my support and then multiple levels of contact for my resistance. I'm looking for where structure was broken. So where there was a high and then we seen resistance. So like we had our ceiling, right? And then we broke the ceiling. So I'm looking for where the ceiling was broken. So we have a ceiling here, right? Now, I'm going to point out this. I'm just doing this for an example, right? This right here, yes, that's the ceiling. However, we're not trading at 150, right? That's way out of money. We don't care about anything down here. That's too crazy, right? So we kind of have to look a little closer, even on the weekly, and then figure out, okay, where do we find support, right? So we found support right here, pretty much at 164.08. So I'm cool with using this level. Why? Because we broke through this area and then we came back down to retest it and we had a good reaction off of the level, right? So now from there, we've made higher highs and so far a higher low, right? I gotta speed this up. So you see this? That's the higher low so far. And then this is a higher high, okay? Okay, so that being said, now we're looking at where our region is as far as what we're trading, how we're trading. So I understand and I see that we have a high of 211.66, and most people would go ahead and then say, okay, well, this is a ceiling. Well, no doubt that this is a strong level for NVIDIA, right? We had a strong reaction off of solid earnings, right? And then it came on down and gave it all back. What do I notice when it came on down? Well, I noticed that for price action, this red bar is engulfing this green bar. So that's a bearish engulfing signal. Again, I'm on the weekly painting myself a picture, trying to figure out what story the stock is trying to tell me, right? So anyway, I'm not going to use this as my trading zone because we only have 2 points of contact. So for me, I'm probably using something like either 200, right? Because we have multiple levels. Now I know there's a $12 gap there, but for now, I'm focused on the trading zone that we're in. And even that is crazy for me. So I'm going to go down to 196.44. So I'm choosing 196.44 as my ceiling for NVIDIA. Why? Well, the reason is because I have two strong wicks or reactions to that level. And then we have not a single confirmation above this level. Instead, this is a fake out, right? So I'm identifying these things and I'm kind of just playing the game, right? So kind of structuring my setup. All right. So like, this is what I'm talking about, y'all. Like, I could spend like 2 hours talking about this. So I got to be quick and I got to move on. So essentially what I just did, all I did, and I'm going to keep it a buck and keep it done and brief. This is my trading zone. Okay. This is my trading zone. And then from here, hold on. Am I zoomed in? Get out of my face. Okay. From here, I zoom in to the daily, the 4 hour, the 1 hour, the 65 minute, the 15 minute, and then, and so on and so forth as we get into our trading our day trading and swing trading setups. Okay, put a 1 in the chat if that makes sense, because we're moving on from the chart setup. There's more to it, but that's the overview, and I feel like that was pretty solid information, right? So now, what's next? What was next on our list of things to cover? The next thing on the list was defining and spotting supply demand zones with replays. So the replay thing can take a lot of time, right? But thank y'all for letting me know in the chat that this is making sense. Only got 11 people viewing. That's ridiculous. If you have not liked the video yet, please hit the like button. Okay. So I'm gonna turn this off. All right. So the supply demand zone thing. Okay. So I'm about to show you an indicator that helps you find supply demand zone. However, I don't use this indicator. Like, it's like very, very rare. Maybe if I need, like, my eyes are trained, right? Like, I know what I'm looking for. So if anything, I use it to kind of skim faster and then spot what I consider supply demand, right? So if I turn this on, you're going to see all of this as demand zone, right? Now, one in particular for me that does not make any sense personally is this box right here. So they give you a range as far as what is considered demand zone. So this right here, they have tagged as a demand zone. I don't agree. Why? Well, for one, like, where is this happening? This is happening in the middle of a trend, not at the bottom of a trend, right? Two, how is the price reacting to it? Well, it's actually very parabolic, right? This is not something that I could use to trade off of. So when I'm looking for my supply and demand zones, I'm looking for zones to which it makes sense for me. I'm looking for zones that's connected with particular price actions, like candlestick patterns, that I know typically have a 70+% chance of playing out. So, for example, I'm not a big fan of this one, but I'll use it because we had a retest. So on this break, right, we came back down and we retested our floor at 164.08. So this, they tagged it as a demand zone, and I don't disagree. So this is something that I would say this is a demand zone, and my dark blue zones, that means that they're over an hour as far as the time frame to which I found it, and they are stronger for swing trades when they're touched. Okay, you have to define your indicators, all right, and your tools. If you don't define them, then you're gambling and you're inconsistent with your trading. So it's just something I advise. So I agree with this. Why do I agree with this? One, because it happened at the bottom of a trend, right? So this is an indecision, a doji candle at the bottom of a retracement, right? And followed by a strong bullish candle, right? We got a strong reaction here where price came in and rocketed right back out. We got a strong reaction here where price came down and retested, right, and rocketed up. And we got a strong reaction here. So pretty much I'm seeing this and I define it as an aggressive demand zone. So I label my zones as A for aggressive or P for passive. Passive zones is where the stock price lives in the zone. And that's like something that you don't want to trade. You got to be very patient. SPY was one of those that you better get in where you fit in. I had an eval account messing around and I found out, blew that eval account. Why? Because I knew that the market was choppy, but I was hanging on, right? But it is what it is. I missed the beginning, so I'm starting from the beginning. All right. Sounds good, Tony. But you'll be able to replay this too, big dog, just so you know. It'll be available for 24 hours, and after that is going bye-bye. It'll be reserved for the Megalodons in my Discord. So, but upon request of KGU, of Dean list members and doctorate members, they would also have access to it. All right. So anyway, So this is that. So this is how I find my demand zones. I look for price action candlesticks that make sense, right? So typically, let's zoom in. I'll be real quick. Typically, if you are swing trading, I'm looking for those zones in a higher time frame, right? And the candlesticks that I'm looking for, let's see here, quick, is this. Oops. So these are the candlesticks that I'm looking for. Now, there's a ton of candlestick patterns that, I mean, there's a lot, right? There's a lot of candlestick patterns. I don't like a lot of information. Too much information is like analysis paralysis. So I've gotten away from that as a trader, because at first starting out, you probably have all these indicators because you're trying to figure out all these different strategies and tools or whatever. And you got to find a way to simplify your process, right? So for me, all these chart cheat sheets exist out in the market. However, I couldn't find one that talked about probabilities. So what did I do? I created my own cheat sheet, and I defined what those patterns meant and the probability of a reversal happening, right? Once I seen that setup. I did that so when I see these setups, I'm less likely to sit on the sidelines and more likely to react and respond. So period, right? So now I pretty much look for those. Dang it, I messed this up. 1 second. NVIDIA is crossing 190.29. I might need to change this alert anyway, but we're going to do that. As we zoom in for NVIDIA, like the 4 hour, I'm finding more things that would make me like fine tune my range. But anyway, I couldn't find a supply zone on the weekly time frame. So I zoomed in to the 4 hour, and on the 4 hour, I agree with this doji candle. So this is called a morning star or evening star, where there's a doji at the top of a doji at the top of a move up, right? So this is a reversal pattern. So it's a green solid candle to the left, a red doji candle at the top, and a red solid candle to the right. And that's what you get. So then I would tag that as a supply zone. So this gives me my intraday, kind of like my swing trading setup. So this is the zone that I'm playing for NVIDIA, right? So this is my setup. Now, anyway, that's boom, moving on, right? Hopefully that makes sense. There's a lot more to it, but there's oversight. Put a 1 in the chat if that makes sense. You know what? We had enough ones. Put a fire emoji in the chat. Put a fire emoji in the chat. All right. What else was next? So the next was entry and exit strategies, right? We're covering a lot in a little time. So hopefully y'all can appreciate it. All right. I need to take a drink. Entry and exit strategies. All right. So let's talk about it. Now, I'm going to keep it a buck, right? A lot of times, especially if the market's moving, I hit that ask button. Now, it's not always the best thing, and it really depends on where I am, but I am very cognizant of entering plays, and I'm cognizant of where my play is invalidated. So if I know that I'm like hopping into a play and we're a little far from my ideal entry, I'm more than likely very, very light in that position, right? But if we're at my entry, I'm more than likely a lot more aggressive in that position, meaning buying more contract. So that's that FOMO piece as far as like wanting to hit the ask when the market's on a move. But if you're going to do that, just protect yourself, right? Because you have to understand where exactly the play is invalidated, and then you need to be accepting of where you entered versus where you could have to exit on stop, right? So let's see. Fire. Let's go. Thanks for your time. Queen Fee all day. Rapid fire training session. Oh, snap. It was a rapid fire live stream today. Oh man. That's trash. Okay. My bad. You know what? See, this is what I'm talking about. Most of my content goes to y'all. It's behind closed doors. And the only thing the public really gets are these shorts that I do and like little clips of what we talk about in the rapid fire live stream. And I just messed up. That's where I get most of my subscribers, you know? So getting most, I touch the most eyes for like helping people, right? In that live stream. So if y'all didn't hit the like button, do it now. Okay? Do it now, please. I appreciate you. And then while you're at it, go to another video and like that too. Cause your boy at this point, you know, that's, yeah. Anyway, it is what it is. I completely lost myself on that one. Okay. So what am I talking about? Oh, entry and exits. Okay. So a couple things. So here's a good example, and we'll go over 2 or 3 examples for entry and exits, and I'll keep it brief. Okay. It's not trash. We learned it. No, it's not trash. It's trash that I forgot, right? It's trash that, you know what? It's not trash. You know, it's just like, I just forgot, but I'm happy to be doing this, with y'all. I am. I really am. That's why I posed the question, because I was on vacation. I haven't done like a good training yet this month. So let's get it, right? We here now. I appreciate that, Barry. Real talk. All right. So here's an example. This right here is the demand zone that we just found on a weekly time frame. So we know that this is a strong zone. We know that it's an aggressive zone. So, and we know that if this zone was tapped, that we likely should be in a swing trade, right? That's what this means, right? So what does that mean as far as the entry goes? Well, that means is once we get a price coming to retest this level, we're paying attention to how price reacts. Now we have a decision to make when this happens. One, we can enter this trade once we start to see like the wick starting to happen, and we will like a call option, okay? But we need to understand that if this wick happens and we enter off of this wick, we need to make sure our stop loss is past the wick, right? But this is a good early entry on a position. Now the ideal entry for something like this, because you'd be zoomed in on like a 15-minute, 5-minute or something like that, because likely you're intraday trading. But the ideal entry is once we break above the demand zone, because that tells you that the sellers entered the buyer's house and the buyer said, "Get the heck out my house," right? Like that's what they did. They just slapped them up and they pushed them out the door, and then there you go. Bye-bye. I was like, bye, Felicia. But you know, you hear what I'm saying. So you see that, you're supposed to act on it. Now the problem is that if you enter on this break, then you have to understand that you have to have a predetermined idea as far as where your stop loss is going to be, because it could have came back into the zone, right? But does that invalidate your trade, right? Does that invalidate your decision to hop in here, right? That's something that you have to decide. Now, if we look at this on, let's go. I got to be quick about this. Let's see here. So like, if we're looking at the 5-minute on this same area, right? We came on down, we came to retrace. It looks like we were failing to break out, right? Because we would have maybe entered on this. They did the okie doke, because then they give you a morning star or evening star. This is a textbook continuation, right? This is textbook. I would have seen this, but then you wait for confirmation. That's why it's important to wait for confirmation, right? Because this 3-tier setup tells you that, okay, we have more downward pressure coming. So we get this, and then we get this pop. And when you see this pop, then you have a decision to make. You got to understand that that in the demand zone, you got to see if bulls are taking over, if sellers are being exhausted, and you have to make the decision on whether or not you want to enter here, right? On calls. You look for calls and demand. You look for puts and supply, right? So the entry, right? Your entry is here. So the close of this candle, you had a big green reaction candle, right? And then you have a much lower volume on the sellers, right? Significant reduction, right? So you see that, but then you have to set in your mind what makes a play and validate it, right? For you in this particular play. Well, it'll be at the end of this candle. And if you break and then you try it again and you break and you try to, like, you just sit on your hands. And at that point you just say, okay, I'm just going to wait. I'm going to wait for confirmation above demand zone. I'm going to wait for them to get kicked out, and then I'm going to enter my position, and then you'll be all set, right? Like, so there's early entry stuff to this, and there's, and there's not. So, all right. So the other piece for entering, not just demand, but let's just say that this is one of those horizontal lines, right? So Rail posted that if NVIDIA crossed 172.42 and confirm above, then he's looking at calls. Okay, well, what's confirmation above? All right, let's talk about it. So for my entry, I'm looking at this volume, right? But I'm waiting on the next candle. And I see this next candle. I'm waiting for it to close. I'm on the 5 minute and I see this big wick happening. Instantly, my brain tells me that the bulls are not fully in control yet, right? The bears are still fighting. This is not confirmed. So I am not touching this, right? I'm not touching it. So the next one happens. We flush down and we come up, right? But I'm still seeing top wicks, right? I'm still seeing more wick than body. So I'm like, yep, nope, I'm straight. So all of this is false breakouts, right? These are false breakouts. So for my entry, I can't enter on false breakouts. This is the okie doke. This could go down or this can go up, right? Now, because I know this is a demand zone, I can predict, right, that because we're shuffling around the top of the zone, that we're more likely to go up and down. But we're pretending like it's not a demand zone. It doesn't matter. It doesn't matter. At the end of the day, you need confirmation. So when do we get confirmation? Well, a couple things. One, we have these wicks, but then it looks like the sellers are stepping in, but technically you're watching volume go down. Selling volume is decreasing, right? As we progress through these ticks, 5 minute, 5 minute, 5 minute, then we get a big volume pump on green right here, right? Now we're still met with the top wick. So for me, I'm still chilling. Like, this is not confirmation for me. This is really tough. It's not tough. So this is a two-part move, right? Two-part thought process. The one part is this is a inverted hammer, right? On a retracement, right? An inverted hammer oftentimes represent a bullish reversal, okay? So just so y'all know, okay? So I can perceive it as that. And the fact that I'm seeing volume increase, right? Boom. Well, that would be the next one. So yeah, but boom in the next one, okay? So, but what's my confirmation? The solid confirmation that gets me more comfortable in the position is this big green body here that closed above my level, right? Closed above my level, okay? The next confirmation, right, would be the imbalance that formed between the two levels, okay? Now, there's technical terms I'm talking about that you might not know. It is what it is. I don't have a lot of time to explain it all, right? But essentially, we established demand, and then we got another. This is on the 5 minute. So my 5 minutes is an intraday. So this is my intraday zone, right? Looks different than my swing trade zone, right? So I see that we have intraday imbalance that occurred, intraday demand and intraday imbalance that occurred off a reaction of my major demand zone. So these are signals for me that this play is gold and I'm ready to go. I'm not hesitating. I'm going to hop in. Technically, I'm hopping in once we get this reaction off of this green candle, right? You see the wick? Once we get this wick up, right? This is the retest of this. So we didn't break back through this level. We retested it. I see the volume kick up as selling pressure went down. So for your entries, you're kind of looking for these things, right? These are little like micro signals to give you your edge. But remember, in this particular instance, I was zoomed out, and now like I'm combining what I've seen from an overview perspective now down to the intraday perspective. We call that zone syncing, right? That's what I call it. I call it zone syncing, right? Where my zone is found on my wider time frames, and then I'm paying attention to price action as it relates or reacts to my zones. That's what that is, okay? So we're running out of time, okay? But that's entry and exit. Well, that's entry, yeah, that's entry and exit. So I showed you where you would enter. I talked about where you would exit. Now I want you to just, same thing. So on the exit piece, right? So let's say you caught this, and you caught this put option, right? If you don't know that this is a demand zone, right? Because I know it's a demand zone, I probably would have like been skated out. But understand this: as you're coming down, you're going to retrace at some point. Like, it's just part of the game. You're going to retrace, right? But we're waiting to see what happens after you break through a key level. This level, yeah, it broke above, but if you're patient, you have to wait for that confirmation, and it never confirmed above. So that tells you that your play is still safe. Now you might want to have trimmed your position once you got into demand and started to see this volume kick up, and maybe you left one, you left a runner, right? You left a runner because your play has not yet been invalidated. So this is an okie doke move, right? I'm gonna pretend like I'm about to go on a rocket, and then I'm gonna come back on down, right? And so your exit needs to be based off of that. Your exit also needs confirmation, right? So there's two ways to play it. Either A, you get out when you made enough, or B, if you want to let your runners run, hopefully you're in multiple contracts and you can cut it down significantly and let the other one play out, right? That's what I would recommend. And the other way is just to let it do its thing, right? But you just have to be accepting of what the outcome is. If you did this and held on, right, then you gave up about 40% of your play, 30-40% of your play off of this move, right? And that's a no-go, right? Like, why would you do that? So that's something that you have to think about as you're trading. But nonetheless, it could be a different situation where the demand wasn't here. We're looking at calls, right? Let's go the other way. And if we're looking for calls here, we're not entering until we get to this play. But my stop loss, right, wouldn't be until I seen either bearish momentum through this level or a candle that closed below, right? Another instance is this: if you hopped into a call, you know you're in demand, and you're approaching this level, you don't need to exit, right? You don't need to exit off of fear. You need to wait to see what price does at this level if you found the right level. So I'm in calls. Let's say I'm in calls from here, and I'm riding this up, right? I'm not going to stop out of my position just because I'm seeing wicks. I need a candle to show as if it's going to close above my level. So for now, I am treating this as retracement or consolidation or accumulation, right? So whatever. And so this just happens. This is part of bullish and bearish moves. It doesn't just go straight up all the time. It's going to go up, and then it's going to trade sideways before it makes a decision of the next direction it wants to go, right? So why would I stop myself out when we're in a pending status, right? Now you can do that if you just want to protect your gains, right? And you can leave one in, or you can kill it and look for re-entry. But you have to understand that if you get out, you're choosing to re-enter, you have to reassess where you are, and you have to identify where your new stop loss is, where your new target is as far as where your play is invalidated. Because if you traded down here, you know where your play was invalidated, right? But now you're up here and you got stopped out, right? So now, where are you invalidated? How do you know to get out of this play if you got back into calls, right? What if this didn't go up? What if you got psyched out on this bar or this bar? Like, you really need to know that, right? So that is part of the acceptance. That's a part of fear and fun, right? So you just need to understand what's going on. So for me, as I look at this, if I'm in calls, I have two things that's in my favor. One, okay, yeah, we're wicking, but we didn't have a strong reaction, right? We're not having strong reactions like the bearishness that we had over here. Two, I have a buy side imbalance, right? So I'm paying attention to not only if we close below this level, but my second line of defense is whether or not we're going to close through this demand in buy side imbalance zone, right? It's just all fake outs. So I'm just paying attention to all this. So anyway, that is that. Hopefully it makes sense. Let's see here. I think I'm out of time, but let me see. There's one thing I wanted to touch on as it relates to your entries and stuff. Okay, so somebody talked about exiting, and I wanted to show you that how it looks on the app. Get out of my face. Get out of my face. Get out of my face. I'm too zoomed in. Hold on 1 second. Come on now. Just get out of my face. There we go. All right. Are y'all still with me? Because I'm going to spend like maybe 10 more minutes and cover what I'm about to cover next. I'm not moving until I get some confirmation that we tracking. And that'll chew into our 10 minutes. Because at 7 o'clock Central Standard Time, I ain't getting off. Real life, I already know you. I already know you got it. I want to know, is KGU paying attention? If you in green, you with me. I already know y'all paying attention. I appreciate y'all. But KGU, are you here? If you can't type, right, then subscribe to the channel, and then you can type. If you're here and you're not subscribed, then you're doing me a disservice. So I would appreciate a simple button click. I don't spam stuff. All right, Barry, I appreciate it. Jarda, I appreciate it. All right, so we got 2 KGU members in the building. I know our boy Sean, he's watching back. All right, so okay. Can you see my my Weeble app? All right, I gotta be quick. Put a 1 in the chat if you can see my Weeble app, and then I'll just get smooth sailing. All right, I won't stop. Can't stop, won't stop. Man, I said a lot. All right, so we're gonna do this. I'm assuming. Okay, thank you for the yes. So we're gonna do this. So let's talk about. We're talking about entries and exits. So we talked about it from a chart perspective. Now we need to talk about it from a contract perspective, right? So let's say, for instance, we're looking at the SPY. I'm at the December 9th. December 9th. Actually, let's go December 8th. I think I got a December 8th call or something like that. So let's say I got a December 8th call at $90. So this is on your Weeble screen. So you got a couple ways to look at this. So one, understand that there is a chart on Weeble that is associated with your contract that you have of interest. Okay. So what I like to do is go to the 1 minute or the 5-minute, depending on what I'm trading and how far out I'm trading. Okay. So once I got to look at the chart and I identify where I want to get in, blah, 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 I kind of line it up with where those candlesticks are, with where the candlesticks are here on the play. Now, I'm in SPY. I'm not about to go to Weeble, NVIDIA or whatever. I'm just going to talk. Okay. But anyway, so let's say I got confirmation that SPY is about to go on a rocket, right? Well, what would I do, right? Well, it depends on where I got it, but if I'm looking at this on a 5-minute, right, I'm paying attention to what I see on this chart, right? And what I see on this chart, I read it like a normal chart, partially if I'm swing trading it. If I'm day trading it, you can't really do that, but you can use it as reference as far as the cost of a contract. So anyway, on this chart, I see a demand zone, right? I see the bottom of this. Hold on. Oh yeah, you can see. Okay, let's do that this way. I got a stylus, so let me get my finger off of this and then work it this way. All right, so you have this right here, right? Oh, I can do a couple things. Nah, that's too much work. Okay, so you have this right here as a demand zone, right here, right? And then you have this big green candle, right, that had a high of 93, and then you have the next candle over that opened above, right? And that distance between here and here is the imbalance. So I know we have a buy side imbalance on this contract. So for me, on the contract, for instance, it's looking kind of bullish, right? On top of that, looking at the contract, we had selling lower highs and lower lows, but then we had a break of structure, right? This big candlestick broke the structure of here. Well, it's on its way, right? But nonetheless, we no longer have the lower low. We now have a higher low, right? So I'm seeing the contract options chart as if I was looking at a normal chart, right? So that's that. So what I like to do is, for instance, if for instance I was if the market was still open, what's a good example? The market was still open, I would say, okay, this is my demand zone. If SPY comes on down to retrace, I would be looking to enter a call option, right? On that candlestick that I have tagged as a demand zone, right? And that candlestick, what's the high? The high is going to be the top of my demand zone. So if the buyers are playing ball, then sellers, they ain't getting in. So the high of that demand zone is $83, right? So I can, if I wanted to, I can go ahead and set me something called a limit take profit order, right? So or a market. So I'm going to say a market, okay? A market and a limit order. A market order is going to get you the play. It's going to get you in, right? A limit order, sometimes there's spreads and sometimes you don't get filled, right? It's the same thing with the stop loss orders. Okay. So like you see on my screen where it says stop order and stop limit order, right? If you set a stop limit order, a play or position can like blow right past it and you cannot get filled and you can get smoked. Happened to me on an AMC $11,000 banger. I didn't get filled for all of it. I was not happy, but it is what it is, right? But hey, lesson learned, right? L's for lessons, and I got one on that one. So anyway, so I can place this market order, or actually no, for something like this, I would want to do a limit order because I'm waiting for price to come to me. But I was just giving you an example of the stops. So I want to do a limit, take profit, stop loss order for this play. Why? Because I'm waiting for the price to come to me to enter. Now, I don't always do this, but I'm just showing you as an example. So I want to get in. I can say $83. I can say $85 just in case it doesn't come all the way there, right? And then I want one contract, or I can have 5 contracts, whatever. Okay. Then I need to set my take profit target, right? So I can predetermine, there's math you can do to determine what this contract is going to be worth. I'm not going to go over that in this one, but you have two ways to do it. One, you can do math. Two, you can go based on percentage, based on what you want to make. Or three, you can refer to the chart and identify where you think you can turn a profit. So hypothetically, if we came back down and we hit this demands on a retest, then your first take profit target would be the top right here, because this is a previous line of resistance. Or I'm sorry, support that turned into resistance. If you see that line, look left, right? So it looks like we broke that level before, we found support, and then we crashed through and we found resistance. So this is a prominent level that if we can't cross it, then we coming on back down, right? So I can set the $83 or $85 price target, and then I can go ahead as far as my order, and then I can go ahead and set a $94 take profit target on this, because I know that that's the ceiling, right? I can do that. So you would go in here and you would type in your 94 if that's what your target is, right? Your stop loss would be, okay, what's the low of this candle? The low of this candle is $76. Well, I know that if this falls below $76, that my play is invalidated. So that's my order. Okay. I can go to the day and I can go ahead and say good till cancel, and then I can hit buy. And you know what? I'm just going to place up. Man, they won't let me do it. They won't do, there's no extended, pending whatever. But anyway, that's how it works. Put a 1 in the chat if that makes sense to you. Okay. Now, while you're doing that, do understand that as you're in the trade, you will see on here your position, where you entered, right? Where your stop loss is. And then you'll be able to manipulate this on the chart as you see fit, right? So you can be your own trailing stop on Weeble. Pretty dope. Okay. Up to you. Now, as far as the exiting goes, once I hit a target, so let's say, excuse me. So let's say this is my target, right? So let's see here. Gotta be quick. Okay, so multiple points of contact here. All right, so let's say 174 is my target for my calls, right? Well, once I touch this level, right? If this is my target, I could, if I want, I can set a 5% stop loss, right? So I can go into the contract, set 5%, and then, let it ride, right? So if it comes down, which 5% is a big amount, right? When you're looking at these contracts. So if it's going to be bullish, it's not likely to retrace 5% on something like NVIDIA, right? Because like the spread is there. And when you set those stop loss limits, then those are more geared towards the, I want to say the bid, like whatever the lowest number is, something like that. Okay. Like it needs to hit it. So you put in your safety net. And if it so happens to continue to run up, then great. If you don't have another take profit target, then you're just riding the wave up, and you'll be slowly on here looking for your next exit. Maybe you move it up every $10. Every time you go up $10, you move it up $10, right? And like that's you trailing your stop loss. And you can do it that way, but that's kind of how you play that. Now, on the flip side, for those that aren't using Weeble, somebody asked me about trailing stops, and this is the last of it. Okay, we're at 7 o'clock, and again, hopefully y'all can appreciate this. So on TradingView, right? This is TradingView. This is like one of my accounts, and I posted that I was buying IBIT, which is a Bitcoin ETF by BlackRock. Okay, it had a huge amount of value that got pumped in overnight hours, and I just wanted to hop on the train. So if it comes down, it comes down. I'll just load the boat. It is what it is. But I got my position. So, and then this is my small account. So I think I actually took like 30 shares in a different, in my Roth account or whatever. So anyway, so let's say I'm in a trade, right? And I want to get out. I don't want to just get out. I want to kind of like make sure that like I'm protecting my profit. So let's just say I'm in profit. You can go into here, you hit close on trading or Thinkorswim, and then you can click here where it says limit and go to trailing stop or trailing limit. For me, if I'm trying to protect my capital and my gains, I'm looking at trailing stops on if I'm doing a trailing rule, right? Because the market is unpredictable. If we have some geopolitical nonsense that happens and you're like way up on the SPY and you set a trailing stop limit and a war pops off, then guess what? It's going to flush right past your stop loss and you're going to be negative when you're up 80%. And that's something you want to avoid. So what you do, you hit the trailing stop, not the trailing limit. Okay. So you would set that, and then you right here, it says mark, right? So you can set a market order trailing, right? Or you can set a bid or ask or whatever, right? Or percentage. So you can do all that. I would do the I think I would do the ask. Okay. I would do the ask, not the market, right? So, and that's if I was trading options. So then you have to determine by how much you want it to move. So like if you're up $150, well, maybe you only want to risk $10. So you say, I hit my target, I'm at $150. Anything past that is gravy, right? So for every $10 I go up, my trailing stop is going to follow $10, right? So at 150, if we go to 160, my trailing stop moves up to 150, right? Because, hey, that's where I wanted to be out anyway. If it goes from 160 to 170, guess what? My trailing stop is going to go to 160, right? And then so on and so forth. So, but if the move comes back and retests that, then it's going to cut you out, right? So that's how you play the trailing stop loss, okay? Now, you can do that on your swing trades and then do a good till cancel on for options trades. You would just go good till cancel, and then you just let your swing trades ride out, okay? And that is your TED Talk by Rel. All right, so hopefully I gave you a lot of game. This is, I'm going to tell you this. If you're not, hold up, I got to be quick. Two things. One, if you're not KGU members, if you're not a doctorate or a dean lister, and you found value in this, I would highly recommend that you upgrade. The description to the link is in the chat. Now, if you are Sacrifice4Riches, or if you're not and you want to join the Discord, go ahead and follow the link. I would recommend a Megalodon. Why? Because it's the same amount of value that you're getting pumped in, right? So, essentially what I'm saying here is that if you're not in those tiers, then you do have to understand, I want you to understand that it pays for itself. You're paying for an education, right? But you're also getting plays and you're getting live streams as far as training and trading. And it's insane. Like for me, like this didn't exist when I started trading, right? So KG started like a movement, right? And then like me, I got pushed into this, like the community, like I've been part of KGU for like 5+ years, whatever, however long it's been. And I've always been helping tens of thousands of people throughout this entire journey while I was actually struggling through my journey. But I gained so much knowledge and I just didn't want to keep it to myself. I can poorly execute something, but that doesn't mean that I'm wrong, right? So I decided to put my hat in the ring and start talking to people, right? And then you guys, the community, said I should do this and I should do that. I wish you had this. I wish you had that. Like none of this was intentional or the plan. The plan wasn't to have a YouTube channel. I was sharing my journey on Instagram. The plan wasn't to have a Discord or members tiers, right? I was planning just to share my story, right? And my trading journey. The plan wasn't to have a Discord, but the people that became members wanted a centralized place where they can talk to me, right? Because not everybody has Instagram or whatever, right? And I tried the Google Meets route and it just didn't work out. It was complicated. So I went with the Discord. Before I did the Discord, I reached out to our boy KG because out of respect for him, I wanted to make sure that he knew how I was moving. I can move however the heck I want to move, but at the same time, that's called respect, right? Because I know I'm coming from him and as far as his community, and I knew about a third of the people that had joined my community came from KGU. Now, And it's not a lot of people, but it's a third, which is a lot for me. But anyway, but that's what happened, right? Now those people didn't leave KGU because I encouraged them not to. Like, you don't do that, right? Like, you don't leave a university with all the resources and then go to a private, like, community college, because that's what I mean. What I am. I'm a one-man band, right? So that's what happened there. And then I had one tier system for everybody, and then people were, well, actually, no, I had multiple tiers, different price points, but I gave everybody the same value. And I just pretty much left it as, if you wanted to pay more to support more, then great, feel free. But then people wanted different levels of perks, right? So that kind of stretched me a little bit, and I had to figure out, like, how do I maintain being who I am without, like, cash grabbing, right? And what do you call it? Like, gatekeeping, right? Like, at the end of the day, like, I listened to everybody, and I also listened to myself. I talked to my wife, and I just came to a realization that I've been giving this game away for so long for free, and I don't ask for anything. So why not monetize it? But not just to monetize it, but to allow me to pour even more into people. Without this platform, I would not be helping as much as I do, right? And those that are in the Discord, you know that I go above and beyond whatever you're paying, because I just care. Helping everybody here in KGU and Sacrifice for Riches on Instagram and Twitter, my friends, text chains, whatever, it brings me joy to see, like, something click, but also, like, for y'all to win, like, and for me to be in position to actually help people. Like, so my job doesn't do that. A job is a job. A job is something that helps pay the bills, but it does not bring me joy. It's not a passion of mine, right? It's a job, right? You always look at a job of what can a job do for you, not what you can do for the job, right? Screw that. I know what I bring to the table, but what you doing for me is how I look at jobs, right? So, but this, man, I feel like it's an equal exchange. I'm giving a lot, but at the same time, I'm receiving the, I don't know, it's like fulfillment. Like, I'm receiving, like, y'all in a way where it makes me happy to do this. So the more y'all support me, the more I'm going to pour into you. The more, like, I have another tier coming up eventually. I just need to get my mind right. The more people that go into that, the more I'm going to pour in, right? So that's just who I am as a person, and I just love doing this. So if y'all have any questions, my DMs are always open. Even if I become a millionaire, my DMs will be open. It's just who I am, and I'll do what I can to help who I can. So that's all I got. If that makes sense, it is what it is. I'll see y'all in the Discord. I'll see y'all on the YouTube and all that other stuff, right? So if there's no questions, I always leave it for like a minute of questions. And yeah, I'll leave it for a minute or two for questions, and then I'm going to get off, spend time with the family watching football. Let me know. I appreciate you, real life. Spark 40. Let's get it. Okay. I said a lot of unscripted stuff. Any questions? It's wild that I only got 40 people that view this or kind of came back into this. That's crazy. There was so much value pumped into this stream. Like, in my opinion, probably one of the better ones. They all love Sean. Most definitely. Thanks for being here, Barry, and absorbing, right? Being willing to learn and be here, right? And hit the like button and stuff because those small things help. Y'all, like, I'm trying to hit 5,000 subscribers before the end of the year, but it's really tough. So share a video here and there. Um, there's something called hype points now, so hit that button for your boy. That was never my goal to grow, but it's just kind of now it's become that. Now it's like I want to. For me, it's like, okay, well, now you gave me a goal, let's get it. I love goals. I love setting the bar high for me, and I love hitting those goals and targets because it brings me joy. But then it's like on to the next one. It's like temporary pleasure or yeah, temporary moments of joy. So, all right, 2 minutes has passed. Your boy's gonna go. I will see y'all in the next one. Today's Thursday. Tomorrow's Friday. Not doing anything on Friday. I might. No, I'm not live trading. I need a moment. I need a moment. I'm doing good in options, but at the same time, like, I really want to start like getting down on futures, and I need to get my mind right to get rid of the greed and the day trading, or no, the scalping situation. Scalping is